There are 4 steps that I use to analyze my charts. Any pair at all. I'm going to be sharing those 4 steps in this very video. But before going to that, if you're seeing me for the first time, my name is Divine. What I do here is document how I trade, make interesting videos that improve how you approach trading. If you want to see content like this very video, subscribe, drop a comment. I'll be right back. There are 4 steps that I use to simply analyze my charts. Whatever pair it is, I use 4 steps to simply analyze the charts. And each of these 4 steps have different time frame. That means on every step is a different time frame. The first step that I always use is simply daily time frame. And what I do on daily time frame is to simply understand 2 things: the market direction and the market key level. Now, the reason for this is simply have a directional bias of where price is going to go to on the long run. And the very secret to simply analyze daily time frame is to use support and resistance. In this case, for us to apply support and resistance, we want to zoom in properly and see the bigger picture of the market, right? We want to see the overview or the general view of the market, where price is coming from on the long run and where price might be going to on the long run. In this case, for us to apply support and resistance, we simply use the trend line to identify that here is simply a resistance, here's a resistance, and for every resistance, there is a support. Here is clearly a support. And the reason why this plays a valid support and resistance is because it has at least 3 touches on each of these trends. Now, because I've identified the support and resistance, the next thing I want to do is simply to interpret what they are saying. In this case, at any point price gets to resistance, price tends to sell. And previously, at any point price gets to support, price tends to buy. But in this case, price failed to buy at the support level, but instead the support became a resistance, meaning price is simply on a downtrend. For us to know how to join this trend, we simply identify the key level because price is on a downtrend. Now the key level become the last point price made a reaction from on the trend. And if you're to simply identify the last point where price made a reaction from on the trend, you see that here is simply a key level, then remove the old lines. Here is simply a resistance key level, and the last point price got to becomes the support key level. In this case, we have identified the key levels, right? We've identified the key level. That means step 1 has been done. The next step now is simply go to step 2, which is simply on the 4 hours time frame to identify 2 things: the market structure and supply or demand zone. But our interest now is going to be on these key levels. That means the points we're going to be identifying the market structure and this supply and demand zone is simply on these key levels, right? I want to make sure that I'm seeing this support key level and this resistance key level before I identify the market structure. Now, if you look closely, how the price behave when price got to the resistance key level, and how is price behaving when price got to the support key level. In this case, if you look closely, when price got to this resistance key level, price started going to the downside, and price was simply giving us swing highs and swing low. In this case, if I'm to identify the swing high and swing low, I will see that this place is clearly a swing high that gave us a swing low, a swing high that gave us a swing low, a swing high that gave us a swing low. So basically, on this downtrend, this is the last swing high and this is the last swing low. That means our interest has become the last swing high and here, which is acting as the last swing low. What this means is this: that if price is going to continue an uptrend, we should be expecting price to simply take out the what? The last swing high. But if price is going to continue a downtrend, we should be expecting price to simply take out the what? The last swing low. In this case, what is price doing? Price simply took out the last swing low with a wick. That means this last swing high has confirmed that price is going to be on a downtrend because price took out the swing low and price did not take out the swing high. This is what market structure is saying. Now, how do we identify supply and demand zone? The very point we're going to simply identify supply and demand zone is going to be from this high to this low at the moment, right? Where is the supply zone that was created from this high to this low? In this case, this is the point that price gave us a supply zone. I made a video on how to identify a supply zone properly. If you're lost, you can simply watch the previous video. You will have an overview of how to identify a supply or a demand zone. Now, because we have done the two things we want to do on the 4 hours time frame, we want to simply go to the next time frame, which is simply on the 1 hour time frame. What are we doing on the 1 hour time frame? To refine this supply zone to become a point of interest and to identify the liquidity that will hold the zone. Uh-oh, that was much. Okay. Now remember, on the 1 hour time frame, we are doing two things to refine this zone that we identified on the 4 hours time frame to become a point of interest and to find a liquidity that will hold the point of interest for us to simply take a trade. In this case, if we are to refine this zone now, if we are to refine this zone, we're going to simply be using a specific candlestick that was created in this zone to represent the point of interest. That means here becomes the point of interest. And most likely, if price comes to this level, we should be looking for a sell, right? Because there's liquidity at this point here. This is clearly a liquidity at this point, right? This is a liquidity at this point. Now, the next thing I want to do is simply to see if price is going to still go up to go and top this zone to continue a downtrend, or price is going to continue a downtrend from this point. We are here to analyze the trade and understand how we can join price to where price is going to. In this case here, how do we understand if price is going to continue an uptrend or price is going to continue a downtrend? Is by simply understanding how price moved from this particular low to the current high that price gave us here. Now, if you look closely, if you use our brush, you'll see that price was giving us a market structure here as well too. Right? A swing low, swing high, a swing low, a swing high, a swing low, and this is the swing high. That means in this structure, here is simply the last low. That this is the point where price can confirm a true downtrend, right? A true downtrend will be here. But for us to know how we can join, or if you can join price to sell, or if you can wait for a buy opportunity, we want to see how price move from this swing low, right, to this current point price is on the 15 minutes time frame, right? How the price move from this swing low, that is here, to this swing high that is here at the moment. How the price move here, right? We want to simply do two things on this 15 minutes time frame: identify the entry point of interest and also identify a liquidity that will hold the entry point of interest. In this case here, if you have to simply look at price from this swing low to the current place price got to, which is the swing high here, we'll see that the place you can see a liquidity is simply here. And the place you can obviously see a point of interest is here, right? And also, you can also see another point of interest here. That means in this case, we are seeing 2 points of interest. And the only thing that makes a point of interest to hold is simply the presence of liquidity. The difference now is this, that in this particular first point of interest, there's no liquidity that will hold this point of interest. But here, there's liquidity that will hold this point of interest if price is going to buy. That means a good entry on this particular pair is to simply wait for price to come to this level and then we look for a buy opportunity, right? But if you're going to continue a sell opportunity, How do we continue to sell opportunity? By simply looking at what price did from this point to the current point price is. If you look closely, a swing high, a swing low, a swing high, a swing low, a swing high, and a swing low. That means here is simply the last swing high. And a good entry here is to simply wait for price to simply open tomorrow, being Monday. And if price start buying to the upside, then I'll look for a sell opportunity, right? That means if price open and I see price going to the upside, I'm going to look for a sell opportunity to this zone. But if I see price simply sell down aggressively, then I'll look for an entry for buy at this zone. But in this particular analysis, I'm expecting price to simply open tomorrow, being Monday, buy to the upside, then I'll take a sell entry from here. My stop loss is going to be above this point, and I'll be looking for price to come to this zone, right? It's going to be my entry for a 1:3 weekly reward. That'll be all for this video. I'll see you in the next one. Peace.